Dogecoin's been hanging tough in this choppy market, refusing to crack despite the broader pullback. And with that fresh 21 shares ETF hitting the NASDAQ just days ago, the meme king might finally get some real institutional legs under it. Doge started as a joke back in 2013, a Litecoin fork meant to poke fun at the crypto hype with a Shiba Inu meme. But it exploded into something bigger thanks to a rabid community, endless social media energy, and high-profile shoutouts, especially from Elon Musk, who promoted it over the years. It's proof of work like Bitcoin, but way faster and cheaper for everyday stuff like tipping or small payments. No hard cap on supply. Inflation's about 5 billion new coins a year. But that hasn't stopped it from becoming one of the most traded cryptos out there. Right now, it's hovering around 12 to 13 cents with a market cap in the low 20s of billions, still ranking it solidly in the top 10. Network activity tells a story of steady, if not explosive, use. Daily active addresses have been in the 40 to 70,000 range recently. Monthly figures climbing into the hundreds of thousands and sometimes peaking even higher during periods of increased attention, which shows actual users engaging beyond pure speculation. Transactions keep flowing consistently, often in the tens of thousands daily, fueled by community tips, micro-donations, charity drives, and occasional viral moments that get people actually using it. Volume spikes when sentiment builds. And while it's not a high-throughput beast like some chains, it handles what it needs reliably with super low fees that keep the fun accessible for everyone, from casual tippers to merchants dipping their toes in. This kind of persistent, grassroots activity is what keeps Doge relevant even when prices dip. It's not just holders sitting on bags. People are moving it around for real reasons. The big news shaking things up right now is the 21 shares Dogecoin ETF, ticker TDOG, officially launching on NASDAQ this week, January 22nd. It's a spot product, physically backed by actual Doge, held in secure, institutional-grade custody. And crucially, it's endorsed by the Dogecoin Foundation itself, giving it that official community nod that sets it apart from the earlier ones like Grayscale or Bitwise. This puts Doge exposure right in traditional brokerage accounts. No wallets, no exchanges, no KYC headaches for some folks. Just buy it like any stock through your regular portfolio. Analysts are already talking about potential inflows in the billions over time, similar to what Bitcoin and Ethereum saw, which could bring sustained buying pressure from institutions and retail investors who were on the sidelines. It's early days, but the launch has generated real buzz, with the foundation and House of Doge positioning it as a step toward mainstreaming Doge beyond memes into something more structural. Beyond the ETF, sentiment stays fueled by the usual suspects: social media virality, community memes, and any whiff of Elon involvement. The Dogecoin Foundation keeps pushing ecosystem stuff quietly but steadily, like the upcoming Such app from House of Doge and their partners, slated for early 2026 rollout. It's shaping up as more than just another wallet. Think payments, commerce tools, real-time feeds, and ways for everyday people like artists selling prints or folks offering services to accept Doge seamlessly. This builds on the foundation's work to evolve Doge from pure fun into a practical payment rail, with merchant integrations and charity focus keeping the positive vibe alive. Broader crypto recovery helps too. If Bitcoin steadies or climbs, memes often ride the wave harder, and Doge's history shows it can amplify those moves with its loyal crowd. Check my link below to OKX for a bonus of €100 as well as up to €200 for bringing in friends. On top of that, they have very deep liquidity, a huge number of pairs to trade, great security, and a sterling reputation. They're consistently ranked among the best exchanges in the world with giants like Coinbase and Binance. Grab that bonus in the link, and let's continue. This ETF arrival, combined with what the foundation's been quietly building in the background, is why a lot of people are starting to look at Dogecoin differently than they did even a year ago. It's not that Doge suddenly turned into some deep tech, fundamentals-heavy chain. It didn't. But the structure around it is changing. That matters. For the first time, there's a legitimate bridge between Dogecoin and traditional capital markets that doesn't rely purely on hype cycles or retail FOMO. In the near term, the big thing to watch is simple. Does money actually flow into this ETF? If TDOG starts pulling in consistent capital over weeks and months, that alone changes the supply-demand picture. Doge doesn't need revolutionary tech upgrades to move, it just needs sustained demand. And ETFs, by design, create steady buy pressure when they work. That's what we saw with Bitcoin, and to a lesser extent, Ethereum. Even modest inflows here could act as a floor under price during pullbacks, especially if broader crypto sentiment stabilizes. Price-wise, that sets up a pretty straightforward scenario. If macro conditions don't fall apart and Bitcoin stays range-bound or trends higher, Doge could spend the next few months grinding upward, testing prior resistance zones rather than ripping in a straight line. That's actually healthier. Sideways consolidation, followed by higher lows, tends to pull in more patient money instead of blowing itself out in one move. Throw in the occasional viral moment, because let's be honest, that's never going away with Doge, and you've got the ingredients for momentum to build again. Looking further out into late 2026 and beyond, the conversation shifts more toward utility in Dogecoin's own lane. If tools like such roll out smoothly and actually get used, that reinforces Doge as a simple, low-friction payment token. Fast, cheap value transfer that normal people can understand. That's where Doge has always shined. And pairing that simplicity with better on-ramps and institutional exposure is what could extend its relevance beyond just meme cycles. That said, it's important not to romanticize this. Dogecoin is still heavily sentiment-driven. It reacts faster and harder to emotion than most large-cap coins. That cuts both ways. If Bitcoin takes a sharp hit, Doge usually feels it more. If social buzz fades or attention shifts elsewhere, price can bleed quickly. The inflationary supply doesn't help either, as those 5 billion new coins every year mean Doge constantly needs fresh demand just to maintain levels, let alone push higher. So risk management really matters here. Watch social engagement, on-chain activity trends, and especially exchange flows. Large wallet movements toward exchanges have historically preceded pullbacks. Volume also needs to stay elevated, not just one-day spikes, but sustained interest. Without that, rallies tend to stall out. At the end of the day, Dogecoin remains what it's always been at its core, the OG meme king, and a community-driven asset with outsized upside when conditions line up, and equally sharp drawdowns when they don't. The difference now is that it's no longer operating purely on vibes. The ETF, growing infrastructure, and gradual push toward real-world use give it more staying power than skeptics like to admit. If you're playing Doge, size it knowing it's volatile, expect noise, and don't marry the position. But don't ignore it either. This coin has a long history of looking dead right before it reminds everyone why it never really goes away. Don't forget to check that link below and grab yourself a bonus, and I'll see you in the next one.